According to our forecasts, Asia-Pacific is projected to lead the global economic recovery in 2021. On a GDP-weighted basis, the region is expected to expand by 6.6% this year, up from minus 1.0% in 2020 and above our global growth forecast of 5.2%. Despite this remarkable feat, two key disparities are noteworthy, as they will continue to shape investors' views of the region. First of all, the pace of recovery will depend on the extent to which the economies are exposed to cyclical upsides. For example, in the case of India, where domestic consumption accounts for 73% of GDP, we project that growth will rebound more sharply to 9.0%, the fastest in Asia. India is also ahead of the pack in terms of vaccine deployment. The country has administered over 11 million doses since the beginning of the year, second only to China with 41 million doses. In contrast, developed markets, excluding Singapore, have yet to announce comprehensive schemes, falling behind both in terms of the total number of administered doses, as well as doses per 100 people. Secondly, Bank Indonesia's February rate cut marked the end to the easing cycle in Asia. Going forwards, a combination of rising inflation and narrowing real rate differentials with the United States will restrict most central banks' ability to deploy additional rate cuts. In other words, they will hand the baton over to fiscal authorities for the next leg of the recovery. Emerging markets in the region have implemented pandemic response packages equivalent to 10% of GDP versus more than 30% in most developed markets. While this implies lesser cyclical tailwind in the short run, it may in fact leave Asian economies better off in the long run, particularly in cases where fiscal stimulus is accompanied by an ambitious reform agenda. A strengthening cyclical recovery and prospects of higher earnings will continue to support inflows into Asian markets in 2021. Despite valuations are high, equities remain more attractively priced relative to the global peers in most cases. Moreover, we will also continue to observe a rotation into cyclical sectors. On the fixed income front, brightening growth prospects will also be supportive of Asian debt in places where the risk-reward balance remains favorable.